When I woke up on Monday morning, I was still recovering from the weekend, where I was recovering from Friday, in a headline where one of the biggest chip makers, Qualcomm, it's reported would go in for Intel. In this environment, does that deal happen?
Well, you probably won't be surprised that I'm not going to comment specifically on the deal. What I would say, Intel has a storied history dating back to 1968. They've got a collection of phenomenal assets. The company is clearly going through a transformation. Pat and his team have been pretty clear in the plans that they have outlined, including some significant capex reduction. What I would say is I'm not surprised that there's speculation around a number of interested parties, whether that be strategic or whether that be private equity, who is looking to invest quite meaningfully across the whole artificial intelligence ecosystem, which we've already seen. And we've already seen Apollo obviously work with Intel over in Ireland.
That neither Intel nor Qualcomm commented on that reporting.
Right.
And the other piece of reporting was Apollo, which has an existing relationship with Intel, and again strategic in the sense that they had co-invested in a specific project. Why isn't Intel attractive to a name like Apollo? It is a duration bet. It's infrastructure. You know, in the world of AI, it's building something physical and waiting for the payoff later.
Yeah, look, I think this is long-term generational investment. Funds like Apollo take an extremely long-term view beyond the frankly, the more of a short-term nature of the public markets. And when we look at M&A and the trends that we've seen over the last year, M&A activity is up quite meaningfully off two very low years in 2022 and 2023. And we're seeing strategics much more active, right? Citi advised on AMD and ZT Systems. We advised on IBM and HashiCorp. So not as transformational necessarily as Intel as we're talking about, but we're definitely seeing strategics be more proactive with as it relates to growth vertical adjacencies. Where we've seen private equity most active year to date is on dislocated public market valuations. What we haven't seen so far is the huge number of private companies with high watermark valuations in 2021 starting to come to market. But time results in valuation compounding, and that's where we do have high expectations for 2025 and 2026.
And it's already happening, Phil. Today, news of one of the biggest take-privates in the software area. We've got Blackstone, Vista Equity making a $8 billion take-private offer to a company called Smartsheet. Is that the sort of software long-term revenue that they want to be digging into? Where do you see other opportunities in the take-private field?
Yeah, I think, Caroline, that's exactly spot on. We anticipate that we'll see more of this. I think that artificial intelligence embedded on 2 years of data points in enterprise software is going to start to become really, really interesting. When we think about the first quarter of this year, the AI investment boom, if you will, focused on hardware, focused on chips, and actually we saw a weakness in software. That weakness driven by a diversion of enterprise funds towards AI. But now we're starting to look forward. We've got more data points, and we're starting to see a pickup in activity for enterprise software with embedded AI and how that can really be a catalyst for enterprise. So I think you're spot on. I think we'll see a lot more of this in 2025 and 26. Yeah. And we'll start to see that private supply come to market as well, which is held off for now because companies were very well capitalized. Private equity hasn't had to do anything, but now there is some pressure around DPI, and I think we'll see a more vibrant sell side as well as an active buy side.
That sort of pigeonholes the positive side of making deals and taking private. There's the negative side of stressed assets. I mean, almost Intel might be that story, but we're looking today at Liberty Broadband, of course, key billionaire Malone trying to piece together some of his stressed streaming and cable assets. I'm looking at Liberty Broadband and Charter Communications seemingly getting towards some sort of merger deal here. Are we going to see more of that? Mergers because they have to survive because of industry pressure?
Look, I think you'll see combinations for sure. I also think you'll see companies looking to carve and split and break out very valuable assets as well. There's no doubt we're in a moment of time driven by AI, which is causing corporations to look and reflect about how they're going to crystallize and maximize the valuation for their companies. That can result in adjacent combinations, but it can also result in illumination of value through carve-outs, through split-offs. We've not talked about activism, but, we think this will be a theme that activists will focus on over the next couple of years as well. We're definitely going to go through change, and we're going to go through change through a greater sense of certainty on the geopolitical. This year has been a year of transition, more elections than we've ever seen in the past. Obviously, we've got a big one coming up. We will have a lot greater certainty on both the macro and the geopolitical when we get into 25 and 26. So, yeah, I believe we're going to see more activity for a host of reasons.
You mentioned AMD and ZT. What was the other one that you mentioned that you advised on? There was a second deal.
IBM and HashiCorp.
What is unique to both of those is they got done. Yes. And so I know you won't comment on Intel and Qualcomm, the idea of, but in the context of what happens in November, antitrust, in this environment, do deals of that scale on paper, Intel and Qualcomm, proceed?
Well, the data is going to show a mixed bag of results, right? We also advised on the Broadcom VMware deal, which went through. Obviously, Microsoft Activision went through. But there are examples of deals that haven't gone through. What it means is just, look, there's a lot of focus, a lot of preparedness that's going on early on with advisors and corporations in terms of how certain can we be with regard to global antitrust decisions. Citi's well positioned there. We're operating in 160 countries. It gives us a good global spotlight on how regulatory bodies are going to react. But you're right. All you can do is build in contingencies early on in case deals break. But it can be a distraction when, M&A is announced and it takes 12, 18, 24 months to complete.